Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 30th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with some of my market analysis. I do the same thing for you folks out there in these daily market commentaries, but I go a little bit further and talk about the option strategies I'm putting into my portfolio based on those assumptions I come up with in that economic, geopolitical, and market analysis. For you folks, what I've done is I've streamlined the process of finding the optimal option strategy for you on any given assumption. You need to follow me at protraderstrategies.com on YouTube, maybe even Facebook, where we put those webinars out there for you folks to follow along, because we have guidelines that you can follow to simplify your decision-making process and finding that strategy that will fit your directional assumption. It's not just saying, hey, I got a bullish assumption, we're buying calls. No, we dig down into these underlyings and the internals and find the optimal option strategy. So please check that out at protraderstrategies.com. All right, we usually started off some economic data, it being a pretty light week, but today we've gotten some economic data, at least here in the United States, and that was in the form of goods trade balance. Now, this is having to do with us trading with other nations, and I don't usually talk about this, but I saw an interesting stat not too long ago that 80% of all containers are going back overseas empty, which means we are importing much more than we are exporting. All right, so that number came in obviously a little bit worse than expected at negative 84 billion, expected to be negative 81 billion. Wholesale inventories came off by negative 0.1%. It was supposed to be a build of 0.7%. Now, we've been seeing these retail sales numbers not being that good. Well, this was a good sign that we're seeing those inventories get moved. They did revise last month's number up, albeit slightly. And then we got the Chicago PMI Purchasing Managers Index. This is forward looking. Anything above 50 is expansion. Anything below 50 is contraction in the economy. And we got 59.5, expected to be 56.5. Pending home sales. Now, we've been seeing this number start to falter and some kinks in the armor. Well, it's continuing to be true with pending home sales at negative 2.6%, expected to be a positive 0.1%, meaning those houses are moving in inventory. A revision to last month's number, not as bad as what was originally, but they revised it back up to negative 0.9%. So home sales really faltering here. A lot of that having to do with low inventory, higher interest rates, high prices on homes. All of those things are causing the consumer to back off just a little bit, and it doesn't help that there's been a lot of snow throughout the northern hemisphere of the United States, or the northern half of the United States. That's going to start slowing homes. Who wants to go shopping for a home when it's totally dumping snow out, right? Finally, we got crude oil inventories, a drawdown of 6.1 million barrels. It was supposed to be a drawdown of 3 million barrels, so 3 million barrels over what was expected on those inventory numbers. We also saw gasoline, distillates, and all of those really start to, actually distillates, we saw a build of 3 million barrels, gasoline a drawdown of 1 million barrels. So converting that crude oil into these byproducts, and those byproducts seem to be moving other than the distillates. Now, the distillates are going to go into the manufacturing process, and we've been seeing some of these manufacturing numbers come off a little bit, right? Because we aren't seeing the spending. So a lot of these purchasing managers are going to slow down on all of that as they cut back on production. They're not getting the kind of inventory move that they've been expecting for this holiday season. A lot of it obviously has to do with people being unemployed, lower wages, all of those things we've been talking about in the last couple of weeks starting to show up in and around these newer economic data points that we're receiving now, but it should not really come as a surprise because we've seen all of these other economic data points show some weakness coming in the economy. Now, the stimulus check, $600 per person that's making below $75,000 a year, I don't know if that's going to do enough to really spark this economy at all. $2,000 a person, that would probably change everything, as we saw what happened with the last stimulus check of just $1,200, I believe it was. really spurred the economy throughout this pandemic, despite the fact that people were unemployed. That is something that is really needed at a point in time like right now, where we are seeing that this curve is not getting flattened. All right, now let's talk about the overall markets. Crude oil, I mean, we got a drawdown. We would expect this to actually finally go up there and maybe test that $50 a barrel. But today we're starting to come off just a little bit. I think it's probably a lot to do with those distillates build and the manufacturing process is really not picking up like we were hoping for heading into this holiday season. And that is going to probably wane on the markets going forward if we start seeing more and more lockdowns here. All right, I'm also hearing holiday parties for New Year's Eve already starting to be canceled, or at least being holiday parties at like major events. All right, gold futures up $8 on the day. I extended my triangle here because it's continuing to follow along with that quite nicely. Break above that would signal that we are definitely going to go and test that 1923 area where I've talked about. That is going to act as support and resistance. But something to note here, we've seen that Bitcoin move higher with the dollar weakening, and we would expect to maybe see a little bit more upside in gold, which we haven't gotten. But $10 away from that 19 handle, which is a major psychological level. The real support and resistance area is that 1923 here, lining up with the old gold high from the financial crisis. All right, VIX slightly off on the day. We got movement higher here in the Dow Jones Industrial Average. They did finish in negative territory yesterday, but making a move today up 157 points. And the NASDAQ in positive territory, but finding a little bit of a top here. Something to note, pulling this up, that's not a really great chart setup, but we can see we've got a couple of candles here that are starting to make like a little bit of a topping pattern. It doesn't look that great when you stretch it out too much, but a settlement down here around this point of control, you know, if we were to sell off about 50 to 75 points in the NASDAQ, that would make that look like a bit more of a topping pattern. I can probably draw it up a little bit better to make it a little bit more pronounced here. So let's just give it a shot. But what we're looking at here is we've got this green candle, right, where you get a green candle and then a topping pattern, which is basically a spinning top type of chart pattern. And then right now, what we're seeing is another bit of a spinning top there. Now, that doesn't give us a whole lot of indication, but if this candle were to fill in more like that, it would make us look like the market was wanting to start to roll over. Now, it's not confirmed at this point in time, but we do need to keep an eye on that going forward for the rest of the day. That's going to be a good signal. Again, we're seeing that same chart pattern set up here in the mini S&Ps, where we blasted off to the upside on Monday. Tuesday got a bit of a consolidation there, created an all-time high, and then today it is in positive territory by 10 points, but any weakening, maybe even a settlement below this 9-day simple moving average, which would be about the same type of chart setup as if it were just to settle right below yesterday's low. So we could look at that, let's just call it 37.13. If we got something like that, 37.13 settlement, that would very much look like it is a confirmation and wanting to roll back over, at least around to the 35.82 area where we have a support line. That would be something to keep your eye on if you are really bearish. And if you just thought it was going to roll back over to a bit more of a consolidation area, that would be that 36.74 to play it to the downside. So, you know, about 75 points down if we were to get that settlement. Let's look at the breakdown of the mini S&P. Is pretty quiet overnight, very inside day. Really no vigor in this market in either direction. It's really wanting to consolidate, and we are continuing to see that rubber band wind up, which means we are building up more and more pent up energy. It's going to want to blast off to one direction or the other, and that is most likely going to be news driven to get that snap to happen. And you know, obviously none of us know what that's going to be. There's not going to be a whole lot of economic data the rest of this week. Most people have put their hedges on, taken their profits, adjusted their portfolios at this point in time. So we could really start to see this market slow down, volumes precipitously fall off today and tomorrow. Remember, then we have a holiday, so it's going to be another 3-day weekend going into the new year. But a lot of people are going to have their portfolios rebalanced before the beginning of the year. They're going to want to take some profits, things of that nature, because then it makes their books look good. That's what they're going to be putting out to all of their clients, is what everything ended at December 31st. So they're hedging up, taking profits so that they can make those books look really good. And I think that most of that has been already done at this point in time. So let's get on with what I'm looking to do anyway. PENN, we've gotten that big sell-off. Now, again, similar to what we were talking about with the equities in that move, we have a very similar chart pattern, but on the flip side of that, where PENN is looking very bearish, where we obviously got this topping pattern right there. I'm in this trade for the longer term. You guys remember I've been in this the entire time, so I'm kind of feeling a little married to it at this point, but there are a couple of things I'm going to really keep an eye on. We've gotten this chart pattern at the top there, confirmation to the downside, another confirmation candle, but yesterday we've got that little bottoming pattern right there. So that is something where the bulls are trying to fight back here. Today, we're getting this candle coming in where it's starting to look a little bit red. I obviously don't want to see that settlement below this line in the sand. A move below that is going to mean that we are going to look at a target of right there, which lines up with 70, let's call it $75 is going to be something that looks like it's going to be revisited. So another $12 lower than we currently are if we break this chart pattern. So if you guys are shorter term traders, that's going to be something you are going to be focused on today. If you have a long position in PENN, a break below this chart pattern is going to signal more downside movement, you know, at least coming into the new year, and likely $75 is going to be somewhere where this stock, PENN National, is going to want to revisit. All right, so keep your eyes on this pattern setup today. I'm keeping a watchful eye on it as well. That could very well determine whether or not I'm staying in this chart or in this or not. Now, yesterday, late in the afternoon, I was playing around with this EA Sports and threw up another flagging pattern. Today, it happens to just want to start to break through that, and that is going to signal this market is going to move towards the highs, or at least, you know, test this value area high, which showed resistance the last time. So let's just call it 144 is where it's going to want to move to. Now, if you guys remember, I have on the March long 130 puts in there. It has not gone in my direction. It has only traded sideways. And if you've watched the webinars that I've done, well, this isn't the best setup for a long position where we just consolidate. Basically, the thief in the night, theta, is just picking away at my premiums there. And despite the fact that it hasn't gone anywhere, it is a losing position. With that being said, a settlement right here or above, obviously, is going to be where I pull the ripcord. I'm going to be out of this trade. I'm going to just dump these long 130 puts because it's breaking out to the upside, and I'm just not going to stick around for this trade through to wait for these earnings. Now, the reason why I got into this trade is because of the whole delays on the Xbox and the PS5s. Well, that's going to hurt EA Sports on the 2021 gamings, because it is built on basically a different platform structure, and it can't be used on the legacy platform. So that being said, it's hurting their sales right now, and that is because of other companies, but it's still going to hurt their sales, and I think that they have some downside in there. But I'm not going to fight this uphill battle with EA Sports right now. They're breaking out of this chart pattern. I'm going to be getting out of this relatively soon. There's one other thing that I want to talk about here, and that is IBM. This is another one where I am trying. I've done covered calls in this, guys. Remember, I'm long this stock at around 120 from quite a while ago. Again, continuing to do the dollar cost average, or not dollar cost average. Sorry about that. Lowering the overall cost basis on this trade by selling covered calls, and that just like I talked about with PENN yesterday when I finally covered those covered calls or got out of the covered call aspect of that. This is very close as well, and I'm short the January 135 calls in there, and trying to get, I sold them originally for 50 cents. I'm trying to get out for a dime right now. It's trading around 12 cents. So very close. It's kind of just gotten stuck here right here at the point of control. I'm happy about that, especially when you're doing covered calls. This is one of those stocks that got me interested in trading options because IBM has a tendency to really trade in a tight range. So if you're long this stock, which I think is a good stock to be long, it gives a great dividend. And you can always do covered calls on it. It doesn't usually get called away from you. It's the perfect type of underlying to do this type of strategy with. You get an extra dividend, lower your overall cost basis, however you want to think about it. And if it does happen to break up there to somewhere like 135, we can see that that's where the market has found a lot of resistance. So I would be happy to get called away from that and then start selling some puts in and around that 120 area, maybe even 115, something like that, to try and get those stocks back. Continuously rolling back and forth in that type of strategy is really how you can get ahead in this game of playing in your portfolio. All right, so that's about it. One last thing, make sure you take a moment to go over our disclaimer as we're an educational company. So there are risks involved in trading. You need to know your risks. One other thing, give me a thumbs up if you like this video. Share it with a friend is the best form of compliment here with online education. And finally, comment at the bottom. Tell me what you like to look at on your chart setups in order to determine your directional assumptions. I would love to have that type of conversation with you. So reach out to me. I'll respond. I'd love to chat with you. And finally, other than if you can't take that, take it easy.